Moving forward, a recent survey indicates that South African analysts, businesses and trade unions have revised their inflation forecast down to the central bank's target midpoint. Expectations for consumer inflations are now 4.6% for 2024, 4.5% for 2025 and 4.6% for 2026, down from previous estimates. In addition, this trend, reflecting the lowest expectations in over 3 years, may prompt the South African Reserve Bank to continue easing monetary policy, potentially leading to larger interest rate cuts. Standard Bank economist Dr. Anna Moolman shares insights on the implications.
Several data releases this week confirmed a very benign inflation picture. It started with the consumer inflation data that was lower than expected and below the Reserve Bank's target range. And while this was largely owing to lower than expected food inflation, the data set generally reflected very weak price pressure. The producer inflation data for November also signaled an absence of price pressure at the factory gate level and is still lower than a year earlier. Furthermore, the BER's Inflation Expectations Survey signaled that there is a general expectation that inflation will remain around the midpoint of the target range, not only in the near term, but also in the medium to longer term. This is a very important signal for the Reserve Bank that it has succeeded in anchoring inflation expectations around the midpoint of the target range. So this data clearly signals that the Reserve Bank took the correct action at the recent meetings to start cutting interest rates, and we think that this also paves the way for further interest rate cuts in 2025.